Hello traders and welcome to PL Capital's Market Review. All views and opinions in this video are my own and do not constitute financial or trading advice. Today is Sunday, November 6th, and I want to look at the energy sector today, specifically US oil and natural gas. So let's get started. Looking at the CL futures contract for oil, and looking at the 1 hour chart, I see 5 waves up right here for a leading diagonal. Came down, went into the zone for what I was thinking would be like the B wave. So we got like an A, B, and then Friday we finished up here 92.83. Futures market just opened up on Sunday night here, and we're shooting down. So to me, this is a strong indication that we've got a 5 waves up for the A, B, C. This would all be one of a leading diagonal. And so now I would be expecting like a 3 waves. They come down to 88, somewhere around here, 88, 87, somewhere in there. 3 waves down for 2, 3 waves up for 3, 3 down for 4, and then 3 up for 5. And that this whole thing then would be a leading ending diagonal, because I've got this as a leading diagonal. I can't see, I don't see it as 3 waves. I see just a series of 3 waves up for a leading diagonal followed by an ABC correction. So this would be the A, the B, and then we make the ending diagonal for C. And that makes sense to me. So, I see oil going out to break, will definitely break 93.64. I mean, this is 1 up here of the leading diagonal coming down for 2. I mean, I think oil's going to be getting at least to 95, 96. And if we zoom out to like a 4 hour, so, back on, what day was this? Sunday, March 6th, and back in March, we hit 130.50. And I remember that. It was a Sunday night. As soon as the futures opened, it shot up, and then, boom, quick sell-off. And I see clearly 3 waves right here. So we got our ABC. And then I've got an A, a B, and then 5 waves up for the C. So ABC, ABC. I've got 5 waves down here, correction up, and back down. So then here's another 1, 2, 3. So to me, this is, unless this is a W, X, and a Y, and then we're going back up to break 130, it really could be, this is all creating a leading diagonal, which is hard to fathom that, because then that means oil is going way down, because this would be ABC for 1, ABC for 2, ABC for 3, ABC for 4 will come up, like I said, 95, 96, somewhere there maybe. Could go even higher, could, go up to 100. But then we'd have 3 ways coming back down. So, and then that would just be the leading diagonal. So that would be all A, correction up, and then we're going back down again. So this wave here is going to be very interesting. Like when it completes 5 waves, what kind of reaction do we get? Is it a strong sell-off, coming down, going to be creating 3 waves? So that'll be interesting to see. And on my chart here, I have Ed Morse. He's a Citibank analyst who covers the oil industry. And back in like May 18th, he made the comment that he was seeing oil fall to 99 at the end of that quarter, so May, so that would have been at the end of June, falling to 99, and then 90 by August, and under 80 by year end. So obviously he was a little premature in his first statement, fall to 99, because where's the end of June? Let's see, right about here. And it got down to like 105. So, not too far off, but obviously he was making the statement when oil was at 106.99 or so, and then it got all the way up to 123. So he wasn't looking too good there. But since then, obviously he's looking pretty good. Definitely got below 90 by August, and will it be under 80 at year end? Remains to be seen. But then even on what day is this? Like July 5th, he was now he made the call for 65 by end of year. So it went from 80 back in May, and then in July, now he's calling for 65. So I always remember that, and that's why I put it on this chart, just to remind myself that that's what he is seeing. And he could be right if this is playing out to be a leading diagonal, because this would be 1, 2, 3, 4, and then we got a fifth wave coming down, and that could get to 65 by end of the year. So that's why I'm saying this area up here is going to be worth watching to see what type of reaction we get when we break 93 and we get the 5 waves up. Is this a 1, 2, 3 as a leading diagonal, or is this a B, C, and then we're going down? So be paying attention in this area when we break 93.64. Watch those wave counts, because we could be having one more big drop here. So worth watching. Let's move over to natural gas. And if I zoom out to the daily chart, we've had a massive move up from, like March of 2020. We had this massive move up, and it clearly looks like 3 waves to me. I mean, you got 1, 2, and then 3. So that is telling me that we got a couple of things in play. Now, natural gas had come up. This chart doesn't go back far enough, but came from much higher. So it came all the way down here. Now, either this is an ABC and natural gas is falling all the way down, back down to like the low 2s, which in this environment is really, really hard to fathom, especially with Europe having the natural gas issue. It sounds like they're going to be okay this year, but next year, so if we just look at the IEA, International Energy Agency, they're even saying that the gas storage sites in the European Union are 90% full. So it sounds like they're going to be fine for this winter. But then this article goes on to say, that they caution that the cushion provided by the current storage levels, as well as recent lower gas prices and an unusually mild temperatures, should not lead to overly optimistic conclusions about the future. The process of filling gas storage sites this year benefited from, key factors. But they're saying that next year is going to be extremely difficult, because European Union countries obviously aren't going to be relying on Russia for natural gas. And also China this year had lower imports, which allowed Europe to get more imports. But if China next year goes back to normal, they're going to need more natural gas. Europe is going to need to resupply themselves. And China might go to Russia to get their natural gas, but natural gas next winter, it will be, in the storage season, summer and fall, will be super, super high demand. So coming back to the chart, to me, it just seems like that natural gas isn't coming back down to the twos. So if this is a 1, 2, 3, and then it came, let me zoom back in here. So we got a 1, 2, 3 up, and then it broke that. So it's not like it's creating it's continuing up. This was a 1, 2, 3. And so now I'm expecting 1, 2, 3, 3 waves down. And the next thing would be 3 waves up. So we're creating a leading diagonal. So a couple of things that need to happen still, because this could all still be just creating. I mean, this is enough right here. 1, 2, 3. That could be it, and natural gas is off to the races. Or this could be creating a leading diagonal. So this would be 1, 2, 3. This is all creating 4, and then we're coming down one more time for 5. So a couple key levels. Well, really one key level. This 7.436. If that gets taken out, then this doesn't look to me like a leading diagonal, because then this would be 3 waves, and well, I mean, I guess it could be a leading diagonal, but then like we're going way down. I mean, because this would be 1, 2, 3 for 1, and then we'd have like 1, 2, 3 up here, and then we got another 3 waves down, 3 up, and then 3 more down. I'll make natural gas then I think would be going like down to the 4s or something, because that would all be just a leading diagonal, like A correction up, and then still another wave down. So again, I don't see natural gas doing that just from a supply and demand factor. So to me, this could be the bottom. This 5, 3, 4, 5, that could have been the bottom. And futures now, it just opened up and it gapped way up on this Sunday night here. So we closed at about, well, let's see, closed at 6459, and it gapped up and it's at 6981. So that's a huge gap up, even for natural gas as volatile it is. That's a major move up. So then, to me, this looks like it could be done. So that this could be 1, 2, 3, and actually that's an A, B, and a C for the 2, and now we're going way up. So if we go down to the 1 hour, to me this looks like, well, it more than looks like, it's a 1, 2, 3, 1, 2, 3, and then a 1, 2, 3. So this looks like it's creating a leading diagonal. So now that we broke above this, which I thought might, if we're going down for a 4, I thought it would be in this area that it would start to reverse down. So I'm going to remove that. So if this is 1, this is 2, this is 3. So now I kind of expect 3 waves down. Somewhere this might be the top right here, or might go up a little bit more, but somewhere we definitely have a 1, and then we got an ABC, and then I was expecting to come down for 4 and go up for 5 if this was going to be the 4, but that's not looking very likely now. So to me, this looks like 1, 2, and 3. That'd be 3. We'll come down for 3, for 4, and then go back up for 3, for 5, and then this whole thing will be a leading diagonal for the 1 correction, and then going back up. And to me, that makes a lot of sense. So be keeping an eye on this level, and that gets taken out, then I think this whole thing is done, and we could be marching way up here. So keep an eye on this, from this point, 6.9, see how the reaction we get. If there's a three waves down, and then it holds, and we get three more waves, I mean, there's your leading diagonal. So that is what I am seeing on the two fronts. So both natural gas and oil are, going to be coming into critical areas to kind of decide the long-term future of them. So keep an eye on certain areas, certain levels for natural gas and for oil. When it breaks above here, then we might be having one more leg down for oil, and natural gas might just be chugging on up. That's what I see. Thanks for watching. Leave any comments, and see you guys soon.